All right, so we're looking at the pip talk. We're looking at Christopher Derrick's trade setup on the 26th, I believe. Right, he was looking at this move going up, right, and he was expecting a rebound on the 618. So let me see. He run the Fibonacci, right, and he was expecting this bounce here at the. That's not. Here, it reverse. Right, so the 618 is here. This will have been 23%, 32%, 618, sorry, 50%, 618 here, 72%, 88%, 90%. So this was the 78.6% Fibonacci, right? So he's running his Fibonacci in reverse, right? I see how people do that. When I use the Fibonacci, this is how I run it. Let me show you. This was only 26. Right, it was right around here. Right here, running Fibonacci. Now Fibonacci is a tool, right? So all right, let me touch on the basics for some of you guys here on the call. So this is the financial market, the foreign exchange market. This is the information you're looking at here, right? So what you're looking at is a bunch of lines. We call them candles. And this is a graph, the chart, right? XY axis. Right? On the x-axis is date, is time. And on the y-axis is price. So over time, the price is changing constantly in the financial markets, right? So that's how we make the money. We actually understand when the price will not change, and we place trades to take advantage of that change. So if you don't know how to read these charts, I wouldn't recommend that you be traded. Unless you're using some of the products like the swipe trades, the harmonic scanner, these things. Now the harmonic scanner, you could not understand trading, and you can still utilize the harmonic scanner and make profits, because how you can interpret the harmonic scanner, and I will share with that a little later, is you can simply look at the scanner and understand some key things with regards to taking the trade. And what you will need to understand is how much does it cost to take this trade if it is I lose, right? That's the main question you ask when using this scanner. How much will it cost me if I lose this trade? If it costs me X amount, will I be able to survive that loss comfortably and continue trading so I could be in profit? If it is, the answer is no, well then you don't want to take the trade. So for example, if it's 50 pips, it's a 50 pip stop loss, meaning if you lost 50 pips. And even at a micro $5 is too much for you to risk, well then you will not get into that trade, right? So even outside of the harmonic scanner, you always ask yourself the question, if it is you lost this trade, can I handle the loss, right? So Christopher Derrick had posts here. He had posted a setup showing how you could take the buy at a certain point in the Fibonacci, right? So the Fibonacci is a tool, and what it does, so these lines that you see in here, the green lines mean that the price is going up, we call them candles. And the red candles are when the price is going down. So if you look at a single candle, right, you look at, let's say this green candle here, then in this time frame, which is an hour time frame, you could change the time frames here. In 1 hour, the price moved up from 1.0 1.61149. How do I know it's 1.61149? If you look on the right, you will see there's a plus sign and you will see a label, right? And that label, you'll see a price. So that is the price where my cursor is right now. If you see I move the cursor, you see price changing. Right. The top of the candle, you can see the price changing when I move the cursor. So at the top of the candle, the price is now 1.61530. So the difference between the two prices is the amount of pips that the price moves up. Similarly, for a red candle or a bearish candle, if you look at this candle here, you can look at the fact that it started off, let's say it started off here, it went down to here. So it started off at this point, it went up a little bit, and how do I know it went up? Well, this little thin line here, right, that's a wick. And that tells me that the price went up at some point at this level here. But then it went down, and eventually it closed off at this price point here. So if I was to do a sell when this candle opened up, and after 1 hour the price changed from 1.61512 to 1.61313, then I would have made money on the sell. I would have made 20 pips in profits, and that 20 pips can mean $2, it can mean $20, it can mean $200, it can mean $2,000, depending on how much I risk. Now, if it is I took a buy instead of a sell, right, and for that hour the price went down 20 pips, it means that I will have been in the red 20 pips. It doesn't mean that I will have lost 20 pips. It just means that the trade is going to draw down, meaning it's going to basically minus from your account without closing it off at 20 pips. So if this candle had turned green after and went back up, I would have survived that 20 pip drop before I went back into profits. But in this case, it has continued dropping. So it would have been worse. You would have lost, it would have drawn down over 100 pips going down here, right? So I just given some kind of basics so that those of you who are new, you'll better understand when you look at a graph, when you look at a chart, what to interpret when you look at it. Now, having said that, what I really want to share is what Christopher Derrick had shown in Pip Talk. So if we go back to Pip Talk, we see that he identified this zone here, this blue area here, and he called this is called what we call a reversal zone, a price reversal area, PRA, right? Or a major reversal zone. So let me show you. Right, so in this case, this is where he identified this zone here, right? He will have highlighted it with a rectangle like this. But he will not have reached all here, right? This is where he will have been. Let me show you. One second, guys. One second, guys. All right, so look at this, right? So this is what he will have had for this trade, right? And how he came up with this was one, he will have established the support and resistance. He will have established that this zone here is a good support area, meaning that when the price came and looked at this zone, it came and it approached this zone, it always went back in the opposite direction. So he looked at this over a period of time and he said like, all right, well, if this thing is coming back down and it's testing, it's showing a wick here, he is expecting it to respect this area, meaning that it will not go further down. So it was a great opportunity to do the buy. You understand? Now, if you think about, I like to use analogies, right? So let us say you are in a room and there's there's two people in the room, right? Or there's one person in the room, and someone says, "I want to do a bet with you, right? I want you to identify at any point in time, identify where this person, right, is going to take 3 steps forward in a southerly direction, right? Now, the room has, let me draw. Here. Right, so let me say this is your room. And there's a door here, right? And there's someone in the room. All right, so his body is separate from his head somehow. Right, vamos continuar ha. Right, aí não All right, so someone tells you, right? There's someone in a room, and I'm gonna pay you $1,000 if at any point in time he's in that room, he takes 3 steps in a southerly direction, right? But you now have to observe the person, and you will make a decision at any point in time and say, look, at this point in time, he's going to take 3 steps suddenly, and I'm putting my bottom dollar on it, and he's going to do that. In fact, I am sure he's going to do it, and therefore I could actually bank on that, right? Right. Where would you? Let me see. Hold on. Draw a window, right? And a couch. The couch, right? Right. So I want somebody on this call to tell me if you had your last set of money, right? In fact, you're not supposed to be trading on your last money. But let's say you had money and you was to make a decision, right? The deal is you have to identify the highest probability that this person is going to take 3 steps southern, in a southward direction, right? So this is north here, right? This is north, this is south. This is this east, this west, right? Right. So anybody could tell me where will that person be in that room that they will put their hand on a block? At least they will feel highly confident that that person is going to take 3 steps south. Anybody on the call? I don't want to point out people, but anybody could give me a Jeremy. I'm meeting you. Tell me where you think, where's the best place that that person could be that you will say, well, I could probably put put a bet that that person is going to take 3 steps south. Okay. All right, Jeremy, not answering. Maybe at work or something. Diana? I want to choose Andre. I feel Andre gonna know the answer. So choosing
On the
somebody else.
line work.
Can work?
I just watching, yes.
You can give me an answer quick.
No, I don't even know where you draw there. I just in and out.
Oh, okay. Okay. All right, well, let me just, as you're here, let me just explain quickly. You don't need to answer, but I explain it so that you're here, right? So this is a room. This is someone standing up in the room. This is a couch, 2 windows, and a door, right? This is north, south, east, west. And you are making a deal, you're making a bet that this person is walking around in this room. Where will that person need to be for you to take a high confident bet that that person is going to take the next 3 steps now suddenly direction? Anyone? Andre. And I'm gonna ask somebody. Um, Mrs. Flanders. I'm not sure if she could come on the call because baby might be making up. Sorry, I'm seems as though she can. All right. Anthony. Nobody. Andre. See somebody jump off the call like frightened. Like Jeremy going on. Andre, you could give me the answer to this one. I'll unmute you. All right. Before I answer the question, give me a. I want to get a 111 in the chat. I want to make sure everybody following here, right? A 111 in the chat if you understand the question and you're looking forward to the answer because your name could be here on the call and you're actually not paying attention. So I want to know who paying attention and who not. Uh-huh. All right, Anthony paying attention. All right, so for the sake of time, I will, all right, good matter. All right. For the sake of time, I will answer the question, right? So this guy is in this room. The deal or the bet is You want to identify where is the highest probability that this person is going to take 3 steps south, right? But what we are saying, all right, so Martha give an answer. She says going towards the door. Now, this person is here, right, Martha? So at this point, they could move in any direction. They could move here, they could move here, you could feel to go to the couch, or you could feel to go to the door, you could go and look at the window, look at the nice clouds and the trees and everything, right? What I was asking is, where does he have to be positioned in order to feel highly confident that he's going to take the next 3 steps in a southerly direction? And the answer to that is where if it is he is standing at the door and the door is open. Right? If he's standing at the door and the door is open, then it's highly likely he's going to take 3 steps south. Right? Out of all the positions he could be in this room, this here is the highest probability that he's going to take the next 3 steps south. The reason why is because of what a doorway is. Right? If he's standing up by this wall here, right? Even if he wanted to take 3 steps out, he can't because he's going to be blocked, right? But a doorway is the indicator of something that people normally pass through. So because he is standing there at the doorway, it is a highest probability that he's going to take the next couple of steps in that direction. Now he could reach the doorway and he could still turn back and go back in the room. He doesn't have to walk through the door. But it's just where would you take your chances that he will go south, right? So coming back to this setup here. Coming back to this setup here, you notice this barrier here is like a fence, right? And over time, this fence was, it had times where the price jumped over the fence, eh? But a lot of times, the price respected the fence. It didn't jump over. But from time to time, it will jump over, right? It will storm the path. But most times, it will respect that fence. So in this case, what Christopher Derrick is showing is that we establish here is a fence. Because the reason why he knows a fence is because he's looking at the history of price. You see that when it came down here, it tried to pass it, it reversed. It has this huge wick, right? Then it came back here. When it passed it this time, it came back up and it touched it before it continued down. And it came up again, it saw it, it respected it, it went back down. A lot of times when the price hit that fence, it went back down or went back up. It reversed in the opposite direction. So what he's saying here, in this case, with that wick forming there, even though it's a strong move down, because of that wick forming there, he is saying that there's a high probability that it's going to go back up. Now, the next question is how much you have to risk in order to take this trade. Because yes, it could go up, but it could pass the fence a little bit before it goes up, just like how it did with this wick here. See how far it went down? So, in a case like this, what you could do, if it is you are confident that it's going to go up, you can put a little space, a little room for error, right? Enough that if it does, oh, you're not seeing the chart. Oh, I need to, 1 second. Good, good. On the whiteboard, put back on the screen. Right. So this is Christopher Derrick's chart here, right? He draw this fence, or what we call a support or a major reversal area, right? And what you're seeing here is when you look at the price, when it reached this fence, this support or resistance, it normally went back in the opposite direction. And in doing that, it normally forms wicks. And these wicks are significant in size, right? Also, if the price happens to pass that fence, right, it normally comes back and checks the fence, right? So it's just a behavior of how price behaves. It's called the pullback. So in this case, it went down and then it pulled back and then it continued going down. It came up, checked it, went back again, right? Came up here, tried to pass it a couple of times, did not, went back down. Then eventually it came up, and normally when it passes the fence, it normally just passes a strong candle, a long candle, right? Now this candle here is a long candle. So that's why for me, when I see this, even though I'm seeing this wick, I'm saying is the probability is 618 on the Fibonacci, and I'll explain that. I will still put at least a stop loss that will probably take care of this area here. So even if the wick, if the price come down here and it pulls back and it goes back up like this, it will still cater for at least some room here, right? So what it is I'm showing here with this here is that the Fibonacci is a tool that measures the percentage of the previous move that the current wave, sorry, the percentage of the previous wave that the current wave has reversed. So what is the previous wave and the current wave? So like this whole move going up here, this is the previous move in a bullish direction, an upward direction. So this is a bullish wave. It's going up in an upward direction. And then the price reversed. It came and it started to go down. So what percentage of this upward move did the price went back and reversed? And so this reversal area here combined with the 50% label here on the Fibonacci, right? Also combined with the fact that we are in a bullish trend, right? Combined with the fact that so we look at the reversal zone, we look at the 50% on the Fibonacci, and we look at the trend, the bullish trend, right? If we look at the 4-hour, right, you will see that this reversal area is a strong area. To spread that box, this blue line, to make it longer across the map, the chart, what you're going to coordinate and you put in, you increase the bar value, negative and positive. So like negative 1,000, positive 1,000, so that you could get it stretching across, right? So look at this. A lot of times the price came to that blue line and reversed, even when you go back in history. So it's highly likely it's going to come and touch there and reverse and go in the opposite direction. That's the information that Christopher Derrick used to come to a decision that this thing was going to go in our back. Right? So I'm giving you how to make those decisions and how to also agree with the traders. So when you see an educator or someone who's trading, who know a bit about trading and sharing a trade, these are the ways that you will look at the trade and interpret and then analyze for yourself and come up with a decision whether you should take that trade or not. So in this case, I will definitely take this trade, right? And what we can see here is that, let's see what happens. All right, look, this thing, it didn't go up to this here. It went up how much? went up 58 pips before it went down. Now in this case, yeah man, in this case, Crystal Derek has a policy that once you could take a 2 pip stop profit, go ahead and take it. Meaning that once you're in about 5 to 10 pips in profits, bring your stop loss above the entry and put it at least 2 pips above the entry so that if the trade reverses like this, you're gonna not lose money. So that's why he can give trades like that. Now, here's the thing. Even though it went down, it did respect it for a while before it went down. A lot of times, even though the price, now here was the thing that gave it away in terms of it going down. Remember I was talking in order to break a particular area, it has to have a strong candle. So the strong candle is an indicator that the market wanted to go below. But because of the history of it being a strong reversal area, the market not going to just break down in one drive. Typically, in a situation where it's a strong area, even though the market comes strong to try to break it, it will typically have a while before it eventually breaks it. And that is what happened here. So it did respect it, come back up, came back again, tried, it came down all the way to the 618, came back up, and then after a while, it ended up breaking it. You understand? So in that regard, they will have still made money because in the first drive down, it will not have, you will not have, let me go back, only one up. On the first drive down, right, it will have respected it, came back up, right? And then it tried a couple of times before it actually break it down, right? So look at this one. This one here, it came up here, it respected it a couple of times before it break it, right? There was rarely a situation where it just came and just passed it right away, right? So what it is, the reason why I talked about the man at the door is because this is like the man reaching the door. If it is, in this case, he's reaching like a fence. He cannot pass the fence in his first try. Most times when you observe him, even though he eventually passes the fence, it's highly unlikely in his first attempt, he's gonna pass that fence. So there's an opportunity for a buy at that point in time, right? So I shared a bit on that singular trade. All right, guys. Everybody understanding what I shared here on this particular trade in terms of making the decision? A lot of the decisions when it comes to trading is to wait for the price to reach a major area and then wait for the reversal, right? So what are some of the major areas, right? Well, we have the support and resistance. So everybody here is supposed to know about support and resistance by now, right? But in case you don't know, I would love for somebody on this call to share what is support and resistance by means of a chart. If it is have a chart before them and they could show it, I would greatly appreciate it. I don't like to take the spotlight and do everything myself. I like other people to do stuff. So the call is about to end. I would like to invite someone, if they could share their screen and show us what is support and resistance. I just join up this pattern because the call is about to end. Right? So I just see an opportunity here for a possible sell, right? On the Euro AUD. We're gonna touch that at the end, but I would like someone to share what is support, what is resistance, and so that we could learn a bit and we could make some money. Right? So the call is gonna end. Is anyone willing to volunteer to share what is support and resistance? All right, nobody so far. But I will see if I could choose someone when we come back. Hop back on the call. We're going to end the call, click back on the link, and we're going to continue.